for those of you that are new, cycle analysis looks at the heartbeat of the market, rhythms of the market, and we do that by looking at repeating patterns, which are called cycles, which are measured from low to low. Those of you that have not yet taken our cycle analysis workshop it would greatly benefit you. If you did that, it would help a long way in understanding what we present. Here is the light crude chart right over here, and you could see as we look at that, the cycle brackets are on the bottom, and those are just simply our guides, as you see here on the weekly chart. And I'm going to adjust this because it works a little better when you put it out to a longer time frame and then come back. So we have a 10-year weekly there. We have a 6-month here, which I'm going to move out to a 2-year daily. I moved that to 2 hours, so we don't want that, right? We want a 2-year daily. And there it is. So that's our cycle analysis. We've had some quick moves in the stock market today, which is somewhat affecting some of the other markets. Also, what happened was that Mnuchin came out and he said, getting something done before the election seems like it's difficult. Well, that's not really new news, is it? We know based on the way that they have been struggling. And if you saw Pelosi on TV yesterday, she was just making her case for staying strong and holding firm with what she wants to pass in the new stimulus bill, the rescue bill, any way you want to put that. And all of that just shows you, as the stock market gave up a quick 30 points to the downside, how dependent the market is on government or federal juice. Yes, it's been juiced, and we've seen these markets benefit from it very significantly. And the question is, what happens after they finally pass something, which may be after the election? And how much can the market count on further juice coming in? So here is the light crude market. We're going to look at energy, foreign exchange, the metals, Bitcoin, treasuries, and the stock index futures, grains, and softs. Lots of things to look at. And let's just blow up this chart right over here. So you can see the cycle rhythms that we're looking at in here. This decline came right to that point. As you could see, the low right there was pretty strong at that point, and the expectation would be a higher high. We got that, and you got the reversal. You see the engulfing right in here, and then once it broke underneath that low right over there, that cycle low that was there, it was a warning, and sure enough, well, it absolutely collapsed at that point. That was related to the what now is the next Great Recession, or the current depression that we're in, as demand was expected to be really low. And of course, light crude went down to minus $40, so we don't really have an idea of what the real anchor points are in here. But still, you can see that the cyclical pattern holds up very well. As you got the rally in here, it really stalled that resistance as expected, and then moved down into this support confluence area. The support confluence area came off of what we took as multiple lows down over here in order to get something that made some sense to us after that, what most of us thought could never happen, and that is see negative pricing in any future. So now it very much looks like this cycle low came and hit really a very high support area, and now is moving up. All of that very well could be within the context of a range that was trading in here. You can see we pretty much have that. We have a fib target zone right over here that we think will probably offer the top of the move in here around $46 over coming weeks. And if it gets underneath this level over here at that last low, that is going to be a very negative occurrence. So we actually would not expect that, and we think this pattern is going to shape up to take out this high over here, which is the highest probability, that area around 43.50. So when I look at the shorter term, now we're in an upward trend. So we would be looking at upward configured cycles that we see in here as we've gotten into this positive phase on the intermediate. So here you could see the negative cycle right in here, and you could see how it aligned. There's the low, here's the low here. Principle of variance says it could be on either side of this by a few bars, and that's what we had. So that's pretty clear when you look at that. and that then says that the next rally will come and hits this cycle peak resistance there, which is actually a pretty strong occurrence. Usually after you see a low that equals the previous low, the next rally doesn't get quite that strong. But this one did, a nice upside move. And what that says to us is that you're probably going to get through this breakout area here on that where that peak was made on that cycle right over there, and then maybe have some modest correction here and then moving up again. So we think we're going to be in an upward track right over there, moving with a positive overall directional component that is influencing the market. That is cycle language, the lingo that I use, which basically says the underlying overall momentum and trend now appears to be positive, and we would expect that the patterns would be tracing out in a positive way.